I'm Pastor Aaron Harris, and this video is about life insurance mistakes that could be costing you thousands of dollars today and millions of dollars in the future. In this video, you'll learn about term life insurance, whole life insurance, universal life insurance, and the common mistake that people make when choosing a life insurance policy. And if you watch until the end, you'll know which life insurance policy is best for you and your family. Many people avoid the conversation about life insurance because they do not want to think about death, dying, and the death of themselves or the death of people that they love. But life insurance is not just about death and dying. Many life insurance policies actually give you the option of a living benefit, meaning that you can benefit from your life insurance policy even if you are still alive. If you were ever to get seriously injured or to become disabled, or you really had a big health crisis, then the living benefit can actually step in and help provide you money while you are still alive. So the big question becomes, how much coverage should you actually get in your life insurance policy? One of the things that you want to consider is end of life expenses. It's nothing worse than seeing families having to go out and pay for a funeral of a loved one by doing fundraisers and car washes, when in the back of my head I think, wow, if this family would have had a life insurance policy, then they would not have to do these things. Another thing to consider is looking at life insurance as an income replacement. If you weren't able to work, if something happened to you, if you were to get sick, do you have enough income coming from your life insurance policy that can carry you and that can keep you going? Another thing that you want to think about is family. If something were to happen to you, what financial strain would that place on your family? Life insurance is a way to make sure that even if you're not able to work and support your family financially, that they'll still have resources coming in to take care of all of their needs. So when considering how much you would need or how much your family would need, what you should take into consideration is how much debt do you have? How much mortgage do you have out on your home that you have to go and pay back? You can also think about educational expenses if you have children. How much will it cost to get them a car when they get older? Or how much will it cost to get them to school if they have not been through college yet? People with young children will need a relatively higher life insurance policy, whereas people who have children that are grown and gone and through with college may need a little bit less for their policy. And you can also consider what you have for your savings and your investments. People with relatively low savings and little investments will probably need a higher life insurance policy coverage in comparison to someone who has a lot of savings and a lot of investments. Then you know, if you have a lot of money in your savings and you have a lot of investments, that your family would be taken care of in the event of something happening to you. But the number one thing you want to do is make sure that you do not underestimate the coverage that you will need. You would rather have it and not need it than to need it and not have it and cause stress and strain on yourself or your family. So now that we've looked at the idea of how much coverage you should have, let's next take a second to understand the different life insurance policies that you can have. For me, this is a big one. At one point in your life, everyone is going to have someone that's going to come to them and talk to them about investment opportunities and pitch to them a pitch about term life insurance, whole life insurance, and universal life insurance. And I want you to know the difference between the three so that you don't make financial mistakes that'll cost you thousands or millions of dollars. Term life insurance is pretty straightforward. You could get term life insurance with a living benefit, meaning that in a case of an emergency, if something happens to you, you can still receive some of that funding while you are still living, or you can get one without the living benefit. I personally recommend that you get the living benefit in case there is any emergency so that you can be taken care of. When you look at term life insurance, what it is you're able to purchase insurance for a certain term. Usually it's 10 years, 15 years, 20 years, 25 years, 30 years, 40 years, where you're able to select a certain amount of money, where you're able to say, for example, I want to get coverage that will cover me for $1 million worth of coverage for the next 30 years. And so then you'll pay a set amount of money, maybe $50 a month or $60 a month, that will go and give you the certain coverage that you will need. The coverage that you get, or your rates, will depend on how your health is and your age. And so really, when we're looking at it, everyone should have term life insurance. It's simple, it's straightforward, and it will really benefit you in the future. On the other hand, you can also get whole life insurance or universal life insurance. Now, I do not recommend whole life insurance or universal life insurance. Many people that pitch these ideas or these coverages are people that benefit from you making that financial decision to get that coverage. When you get whole life insurance and universal life insurance, the person who's selling it to you actually makes compensation off of that decision that you make, and then the company makes compensation off of the decision that you make as well. The first reason that I don't recommend whole life insurance and universal life insurance is because they are usually 5 to 15 times more expensive than term life insurance. And so that means that most people pay 10 times more money for just about the same amount of coverage for whole life insurance or universal life insurance than they would when they're just going out and they're getting a term life insurance. For example, you may be able to pay $30 a month in term life insurance for $500,000 worth of coverage. Whereas if you go whole life or you go universal life, they'll try to get you to pay $300 a month so that you can have a benefit of about $500,000. So it is way, 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 way more expensive. So you may be asking yourself, why would someone ever get whole life insurance or universal life insurance? And the reason is because the people selling the insurance make a pitch where they push it as an investment opportunity, where they tell them that they can do this and they can make an investment and they can pull out money in the future. But in reality, when you look at it, this is absolutely a terrible investment, and you would get a way better return on your investment just by going and investing directly in the stock market into like an index fund like the S&P 500 that averages about 10% a year on average for the past 6, 7, 8, 9, 10 decades, right? And so on the flip side, when you look at it, what people will do with universal life insurance or whole life insurance is they'll take the money that you're investing there, and then they'll take your money and they'll go invest your money directly, and then they'll make money off of your money, and then they'll just give you a piece of what they made. That's why they're a middleman when it comes to you investing. And what you want to do is you want to always cut out the middleman, because what they're doing is they're charging you a fee to do something that you can do yourself if you just had a little bit more knowledge. One of the biggest reasons that I don't recommend universal life insurance or whole life insurance is because they charge exuberant fees. Usually in the first year, people will just be paying all fees. And after that, they'll charge you 10%, 20%, or even 30% fees on whatever you're investing. And what that means is whatever you're putting in, if you put $100 in, they're taking $30 of that for themselves, and then they're just investing the 70. Where instead, if you invested the money yourself, you would be investing the whole $100 and you would get a much better return on your investment. So you need to always check out the fees and make sure that you understand how much they will be charging you for whole life and universal life, because it is usually sky high. And if all of that is not enough to convince you that you should not do whole life or universal life insurance, well, another reason that you should not do it is because they are hard to get out of. In fact, many people will lie and say that they're impossible to get out of, and once you start it, you can't stop it. But that's not the truth most of the time. But they do make it as challenging and difficult as possible for you to get out of it once you have already started. And so people will put a ton of money into it and pour a ton of money into it, and then after that they have no way to get out of it. And then another reason you shouldn't do it is because if you were to start investing in it and start to get a benefit from it, if you ever stop paying money for any reason, then the fees do not stop. They would charge you fees each and every month until the cash value of your policy reaches zero. So this is not a good investment at all. In addition to all of this, when they show you the trajectory of how much money you'll have in the future, it usually takes about 5 years, give or take a few years, for you to even start receiving more money than you put in. For example, if you put in $1,000 a year for 5 years, then you should have at least $5,000 in your investment. And so when you look at the numbers, you'll realize it'll take you, after 5 years, you'll only have $5,000 invested when it was supposed to be growing over time. Whereas in contrast, if you just invested your money directly in an index fund like the S&P 500 or one that mirrors the S&P 500, then as long as the stock market was going up, then your investment will go up as well. And many people use a fear-based tactic when selling whole life insurance and universal life insurance. Well, they will act like the stock market is a big bad wolf and you need to stay away from it at all costs because you can lose all of your money. And anyone that's using fear to sell, you need to run away from that person as fast as you can. All of our pensions and money is tied up in the stock market in some way or form. And so we need to do everything that we can to educate ourselves on this topic. So if you want to learn more about finances, more about resources, how to manage your money, save your money, invest your money, and make good financial decisions, then continue watching the videos on this channel, which is all about financial literacy.